Okay, good morning, traders. I just uploaded a video just now about how, on my phone while I was on bed, before looking at the market. Now, someone asked a question, like, I give some analysis sometimes, then maybe sometimes my analysis tends to change. Trust me, these markets are very clean and pure. If you know what you're doing, if you know how to read the waves and structures perfectly well, there are some particular places that the market gets to. And if they are not able to pass those places, they call them support and resistance, even though they are smaller support and resistance. It depends on the sentiment of the market, are you getting it, and how you look at your market entirely. Let me teach you something today using this gold chart. What's it called? As you can see, let me take all these things off. There are a lot of things that happens in the chart where you know that you're supposed to be knowing what is happening next. Let me use gold as an example. For example, gold has been trending perfectly well. Are you getting it? Since the month of, I think since January of this year, gold has been trending perfectly well. And I love what gold usually does on the 4-hourly chart. It gives you precise, price action patterns, and also give you precise chart patterns. So there are some particular areas in this chart where if it does not recover those areas, the market will continue its trend to the downside. Are you getting it? So, and those areas are, I'm taking all these things off. That's why I came on the computer to show you guys one way and one or two ways in which you can drive the market. Smaller breaks and retests should go with smaller take profit. Big breaks and retests should go with big ones take profit. So if you look at this chart right now, this is a previous so I think I'll be a little bit fast with this so that to not take much of your time. I guess so. If you look at this chart right now on the 4-hourly time frame, is it clear to you or not? To me, it's very clear because this is a bullish market coming from the downside. Are you getting it? This is a bullish market coming from the downside. We are doing break and continue. So I say break and continue. We are doing this low, then had a higher high, higher low, higher high again. We've been breaking structure to the downside. So you don't get carried away because of what you're looking at immediately. You look at structure. This was an impulse. This was a retracement. This on that impulse again. So we are trading in between this impulse from $1,800 area to 1,000. What's it called? $2,050 area. So we are trading in between these. How many thousand pips is that? $1,800, $2,050 area. That's about 2,500 pips, right? 2,500 pips. Are you getting? So this is what you should look at. You've gotten an impulse. You did a break of structure. You did a retracement. So we are still trading in between this impulse. Don't get this wrong. Follow up. You get it. It's very simple. Are you getting it? So if this was a break of structure to the upside, are you getting it? If we label this particular part as a break of structure, we know that this is an impulse because we broke the structure to the upside. So this is still an impulse. So don't say, oh, gold is massively bearish. Why we are bearish is because we found a resistance at the upside. Are you getting it? So you don't expect people to start buying from this area, close to this area of resistance. People want to, probably sometimes come to the previous support. Probably, this might be an inducement just to come to the downside to continue going up. And me and you know what gold does. Gold is one of the best and the most volatile assets among the USD pairs. Are you getting it? So you should use your lower time frames, probably the 4-hourly. I don't go less than the 4-hourly time frames to drive my market because it's very clear there. When you're clearly seeing your major resistance, are you getting it? Does not mean that this market is massively bearish. You first of all know what is happening on the higher time frame first, so that when you're going to lower time frame, you know that you are trading. But let me tell you something today. Take this on today. Gold loves something. Gold loves all this liquidity and likes taking liquidity to the downside, then recover, then continue. There's a reason I went to the higher time frame to show you something. What gold did. Are you getting it? Gold was on this support. Are you getting it? But it was able to recover with a triple bottom from $1,600 area and continue to the upside. How? You go on your follow time frame, you're not seeing it clearly on your higher time frame. Are you getting it? The 4-hourly is always clear. Look at what gold did. Are you getting it? Sorry. If gold could use a triple bottom to recover this particular area, what's happening? Hold on. If gold could use a triple bottom to recover this particular previous area of value and retested it, watch my little video I just did just now, my 9 minutes video I did on the phone and uploaded. You see how gold behaves. Gold can decide to go down below an area of value and come back. Why is it not expand? Okay, and come back, break above again, retest and continue going. You should have, as a position trader, you should have entered this trade from November 2022 and come back and take profit back at the resistance zone because it recovered. Look at it from the daily perspective. Are you getting it? You can see that this was a previous area of value. Are you getting it? Previous support, but gold lost liquidity. So it did a W pattern or a triple bottom, means you call it price action pattern, broke back into it again, retested and continued going. Why did you leave your position if you're a position or swing trader until you recover about from $1,700 to about $2,000 is about 3,000 pips. So you don't even really need to get to $2,050. You might just, okay, take it $2,050 because there were previous resistance. That was when I gave this trade that leave your trade from 1,700 in November. Watch my December, I think it's my November 4th, or is it December 4th too? That was where I was able to swing up to 2,000, 3,000 pips on gold. So you must first of all understand your market before you go into it. Which market are you trading? You must first of all understand that market before you trade that particular market. You can't just jump into taking trades when you don't understand what you're doing. Are you getting? So overall, we are still trading in between. Gold is still massively bullish, but internally the structures are bearish. Are you getting? So let me show you something now. If we drive this particular structure we have right now, this impulse we have right now, are you getting it? You see that internally there are still break of structures which are very stronger. Hourly structures are still strong structures. So follow up. Let me show you something. There's a reason I'm going back to show you whatever is happening. Right now, after recovering this particular structure, we did an impulse, right? Then we did a retracement, right? And you see that these guys are very accurate. Trust me, with your Fibonacci retracement tools, they are very accurate. So after taking an impulsive move, what do? You wait for a retracement. So follow up. There's a reason I'm doing this. Now, gold does what? I told you that gold does M pattern and what? W patterns to recover. So you should be looking for this M pattern, W pattern, and go perfectly recovered from, even though it went a little bit deeper. Follow up. There's a reason why I'm going back. It has its own character. You understand? So as it stands right now, we did a retracement of 0.618 before doing on that impulse again. Are you getting it? So definitely, are we going back to do a retracement to the downside? And follow what I tell you. Gold usually loves what? M pattern, W pattern. So don't get carried away. I'm coming. Just let's finish this, please. So after doing this retracement to 0.618, we did another impulse again. And even your Fibonacci trend extension tools is there to tell you where this market is going to. Very, very accurate. Gold has been one accurate market, even with its volatility. I guess it is one crazy accurate market I've ever seen in this whole move. So you can even go come and say, okay, let me take the whole movement, the whole impulsive move, even with the recovery and the fake out. And you see that if you put your market there, you see that your market was even perfectly going to, what's it called? Our, what's it called? 0.61, 0.786, even the previous resistance zone to go and take profit. Because this is an impulse and this is a retracement. This retracement was shorter. So breaking above again, you should know that we'll get to that particular, previous area of value, which is the previous resistance zone, then probably do a retracement to the downside. So if we get an ABC move to the downside, are you getting it, before continuing this chart? That is how gold works. So first of all, you must first of all understand the market in the from the upper time frame perspective before you know what you're doing. Are you getting it? So take this on today. I just said let me explain gold again so that people that are going on the lower time frame to find out whatever is happening know what they are doing. Are you getting it? Because a lot of people now might not be interested in buying from 1930 discount to the back to the upside. After a major move, what happens in the market? The market tries to do an impulsive move to what's it called? A retracement to the downside, probably an ABC move. And I gave this particular pattern before. If I could delete some few things, you can see the ABCD harmonic pattern happening here, and what follows up after the ABCD harmonic pattern. If you have been following up on my videos, you see that the market, after doing probably, where is it? ABCD harmonic pattern, ABCD harmonic pattern. The market does what? An ABC move to the downside. Are you getting it? An ABC move to the downside. Are you getting it? Before continuing this market. So what do you know? Do you know Elliott wave? Do you know this harmonic pattern? Do you know the waves? Are you getting it? Some people say smart money concept. No, the market is very, very pure and clean. You are the one that is failing to understand the market correctly. Most of the time, it can just do a retracement and continue going. But I would love to see an ABC move to the downside. So I'll be giving you all the areas where how your market actually know do what pivot. So I'm doing this particular video because of pivotal points where the market gets to if it's not able to print a particular market as in price action pattern perfectly well, know that is going that place is an inducement. So from what I'm seeing right now, I'm telling you that $1,900 was an inducement. What is an inducement? The ability to bring early buyers in, only to liquidate them and still go your way or your direction. I've given that particular definition before. Go. I've given that particular definition before. So focus. Let me show you this. I know I'm in some trades right now, which I should be monitoring and taking profit because of whatever I'm explaining right now. So it's important that I do this video. So good explain 100% is what I'm giving you right now. So if we continue this particular chart, you see that we broke short downside. Does not mean that we are bearish, but does not mean that you should not know where you should be trading from. The market will tell you whatever I want to do, trust me. But follow up, I'll show you one or two other things. Now, me and you know that this is the only, after the break of structure, this is the only other block zone and then the demand we have. But normally, the market does what? This. Retrace to 0.5, 0.618 before doing what? Continue to the downside, which if we measure very well, are you getting it? We are at 0. We retrace from 0.5, 0.618. And the market has done an internal inducement in this area. I'll break it down, we'll still get there. But remember, we are at an important, big, very huge, what's it called? Resistance zone at the upside. 3 double tops. Are you getting it? And this is the demand zone, another block support. This is the last support we had, and this is the demand zone, the last resort of 1862 we have here. Don't get carried away. Still follow me up. Do you think buyers will just want to buy at a premium zone? Are you getting it? Say, okay, buy from here and continue buying, saying that, okay, let's break and retest and continue buying to continue going on. Buyers might not be, depending on the strength of the dollar, buyer might not be interested in buying from these. No, they are both now, but there were no movement out. Let me go down. Let me go down so that I want to go down. Let me go down to the foundation so that I will tell you, I'll show you what is happening here. We have seen that we retrace from 0.618. We will retrace from 0.618 on this particular impulse. Are you getting it? But a buyer convinced to buy from this retracement levels again? Most buyers might not be convinced. If you know what you're doing, most buyers might not be convinced to buy from here. Are you getting, as long as we're not breaking some major resistance because of what we have at the upside here? So I do make sure that I think like the smart money, I think like the banks, the financial institutions, the market maker, the big ones in the market. I think the way they think before I take decisions. So from what we have right now, I get it. If that market was supposed to follow, and you know, I mentioned it in my last two videos where I said that if we're unable to break above $1980 area, we were in a doomsday. So, what is that doomsday? We might, this might 1,900 might be an India, what's it called? An inducement. I guess it, unless we're able to recover something. Now, let me go back to that particular part now. So people say that they don't, they get confused at one particular part in my video. Now, how do you know that 1,900 is an inducement? Follow me. Let's drive this market on the, okay, should we use the daily? Is it clear on the daily? No, let's use a for the chart. Follow me. Now, remember, we are still in this impulsive phase. We'll find resistance at that particular top of $20-50 area, dating back from this previous, what's it called? Definitely, you should know that we'll find resistance dating back from March of 2022. I guess still dating back from 2000 and what? From 2000 and 2000. So you should know what the market entirely is doing and should know where you should take profit. So since we are still on this impulse and we have a retracement from 0.618, how do you know that the market will continue to the upside? The market, look at gold, is so sweet. How? Because when we got to this particular level, we broke structure to the upside again. Are you getting it? So this is a break of structure to the upside. Here becomes our last low we had in this market. Are you getting it? So we are not even supposed to break structure to the downside again if this market is supposed to continue. So I'll label this place a change of character, and you can see that immediately we change character. The market found the first resistance. Are you getting it? The market found the first resistance here. Are you getting it? So we came back. I'm coming. Hold on, very important. Follow up. Gold is very sweet. So after breaking structure to the upside, we're supposed to just to come probably down here, continue breaking structure to the upside, but instead we broke to the downside, break structure to the downside with this, and found our first resistance here. Are you getting it? Broke structure to the downside again. Then we tried coming back, found resistance here. So you should know that this particular place is important, and we've changed character to the upside, to the downside. Are you getting it? So this particular area right now, if you were wise, you should have known that when we get to this area, anything that is making us switch to the downside, we will enter a bearish market. And the only thing that can save us then will now be those our price action pattern, which gold usually does. So follow up. Remember, we are still on this impulse. We are still trading on this impulsive move. Are you getting it? So this impulsive move, we should measure the retracement zones, as in, let's say, okay, let's retrace 0.5 or 0.618 again. You see that we actually first of all retraced. I get in it from 0. What? Follow up. We actually retraced from 0.5, 0.618. So I call the 0.5, 0.618 Q zone. And if you follow up, you would have seen that a price action actually happened on that particular 0.5, 0.618. And what was the price action that happened? A head and shoulders pattern, or you can call it a W pattern. Look at it. It was very clear because when the price came to follow up, look at, we were having little support in this area. But when the price came to that 0.5, it broke it back to 0.618. Are you getting it? So you should have drawn your trend line to it, that this is 0.5. Perfect. It was retesting 0.5 perfectly. So you would have even been taking all this trade back to this resistance, taking all this trade back to all this resistance before we finally broke it and retested. Are you getting it? Made it a resistance zone. We broke down again, broke structure to the downside again, came back to it again. There's a reason I'm doing this, so because it's happening there right now, where we are right now. Why this person is asking this question? If you don't know what is happening right now, you wouldn't have asked me that question. So we came back again, we were unable to break. I get it, changing the sentiment that if I was unable to break a structure to the downside and try to recover, that market has done what? Change character back to the upside. So both of us still know that overall, this is a bullish market that is either going to retest 0.5 or 0.618 and try to recover back to the previous area of value, the previous resistance zone. So the moment we came to this 0.5, a lot of people might have taken entry from this 0.618 at 1,900, 1,905, probably 100 pips close to the downside, on the hope that the market will come back to resistance. But we at Visionaires, what do? We look for price action patterns, like probably a head and shoulders pattern. Are you getting it? Break and retest, take a trade, and take this trade to the next resistance. So this is our only trade at Vision X, which will definitely come at 100% because we have the mindset that this is a retracement. Are you getting it? Overall, the market was even showing us everything using price action. That's why I told you that I'm not just only a market structure trader. I combine price actions to take my market. And if you can see, this market did something. It's a bullish continuation pattern. What are you seeing here? What I'm seeing here is a falling wedge. A falling wedge is a bullish break with a bullish breakout, is a bullish continuation pattern to the next resistance zone. So that falling wedge gave me this my trade from 1,900 video I did back to 1,980. Are you getting it? Are you following up now? Because even this structure, if you carry it very well, you see that it dates back into these previous areas of value. Because this was a previous support that will broke and turn to resistance again. So it might act as a major resistance. So right now, what is happening? That's why I said follow up, that this is our last resort and we must not break it. So this was a previous, hold on, let me take this one. This was a previous 0.5 retracement zone that we broke to 0.618 and did a price action pattern to break and retest and continue going again. So we are not supposed to break it again to the downside if this was a head and shoulders pattern. Follow up now. Look at this. Look at this. If you've been following your structures and you know what is happening and you know you've been following this asset, you should know that what you should be looking out for is a price action pattern, not breaking it down again. Are you getting it? Because right now, if truly the market really wants to continue going to the upside without turning 1,900 into an inducement, are you getting it? You should know that the market is supposed to do a bigger head and shoulders pattern. Are you getting it? To continue to the upside. So the moment we are breaking this previous support that turned resistance, are you getting it? And now turning to breaking down again, are you getting it? You should know that this market just want to come and retest, or probably just retest, or is very weak and it wants to leave that particular that particular price action pattern to do what? To form another price action pattern. So your price action patterns are your chart patterns that helps you to determine whatever is happening in this market. So I will take this off and drive whatever is happening in this particular phase, because let me not take that off first. the moment we are breaking below and not forming our head and shoulder, we can still form and continue going. But your chart, the way you drive your chart tells you whatever happens in the market. Are you getting it? Because whatever I look at is structure, number one. Then number two, I usually try to find the, the chart patterns it is using to drive the market to the down, either to the downside or to the upside. That was what brought me to the conclusion that if we are not doing this head and shoulders pattern, I get it, which is a bullish continuation pattern to the upside, I know that this market has prevailed and wants to prevail to do that. My daily, sentiment I gave you the last time, that are you sure these buyers would like to start buying massively to come and break this particular distance to the upside, or they are looking for a major discount to the downside by bringing early buyers in to liquidate them? Are you getting it? Before going to the upside. So I have those buyers on my head already from a very long time right now. And I'm saying that if truly this market was to continue to the upside, are you getting it? If this market was supposed to continue to the upside, remember I said that word, that if truly this market has completed this, what's it called? I will not use, what's it called? Let me not even use head and shoulders pattern. Let me use W pattern that the market usually does. If truly this was a demand zone, go and look for that video. If really this was a demand zone, trust me, just break above, change character to the upside, come to the downside, retest perfectly well, let's continue going. But you did not break above, you just came to this particular resistance again. So sellers might try to take advantage of that to take this market downward. So conclusively, whatever I'm looking at right now is that this particular 0.5, 0.618 retracement did not break any previous area of value for me, a previous resistance zone or a previous area of value, then retested at 0.31838 or 0.5 before going up. Now, if we even look at this particular move right now, you will see that it's invalidating already. So it's invalidating 0.618 already. If truly this was are you getting it? A retracement, probably an impulse retracement to continue to the downside. So 0.618 is our last resort where we are right now. No, usually I don't take trades from there, but I'll show you where I take trades from, because I even saw the market even did something perfectly well again in these areas for you to know where to take your sell trades from. Now look at, are you seeing anything else? Let me pause for like 2 seconds. Are you seeing anything? You might not be seeing anything, but the market is always doing a lot of things for you, because this market was in a bullish, what's it called? Bullish phase. I guess this was a bullish phase where it was retesting, this was 0.5. If I follow, this was 0.5 area retracement on that retracement zone, but it was failing to break above. It was failing and touching this resistance. What's it called? It was failing. These were areas. This is a bearish pressure trend line. It was failing on those areas. So these were your trade. This was one of your trade. This was your second trade. This was your third trade on this particular, using price action. Even though it's a GBS speculation, price action would have saved you from all this resistance. And when you are seeing those weeks rejection, you would have known that, okay, whatever is happening here, because it's showing you this was a shooting star, this was also a shooting star, this was an evening star. It was there, just all those candlestick patterns were there to tell you that this market will go back to our previous support and even want to break it to the downside. But on the other flip side, what did it do? It still did your head and shoulders pattern to continue break to the upside. And this was a bullish break. If you bring your volume indicator in, you see all this volume confirmation of breaks. Volume came into the market and we were able to come back to our next resistance zone. So what are we doing right now? That is to the most important question right now. What are we doing right now? This market, after breaking to the upside, even still did a head and shoulders pattern for you. So follow up, look at what is happening here right now. If you say that you are confused, that you are not seeing anything, look at this market did what? A head and shoulders pattern break to the upside. So even though I take this off right now, you will see that when we go to this particular, if you are a supply and demand trader, that understands supply and demand. When we got to this particular area, what happened? Let me drive it down by going to the 2-hourly time frame. Let me drive it for you. Even before this head and shoulder pattern form, you would have been able to follow up. So follow up. This was a break of structure. You know what gold usually does before going to the downside. It usually takes liquidity, which it first of all came to this liquidity. So this was a break of structure, and this was a change of character to the downside. Are you getting it? You're not supposed to break any major, what's it called, when you are trending to the upside. So impulse retracement, impulse retracement was changed. Are you getting it? Making here what? A supply or new supply zone. And when we got to that supply, what happened? Immediately you saw this massive price action that happened. That was because when a customer has in buyers saw the sentiment that, okay, we should do a change of character to the downside. We retraced, are you getting it? They came back to this supply and we saw this sell. Why are you then still seriously bullish? This was a massive sell. So your candles are speaking to you. You are the one that is failing to understand the language in which those candles are speaking to you. So to me, I label this particular place supply zone. This was my supply zone. Watch those my videos or follow my Telegram channel. You see it very well that you are the one that is failing to analyze your market correctly. Are you getting? So this was a particular supply zone. The first supply we had, are you getting it? Which we sold and did what again? Continue breaking structure to the downside. So we broke structure again to the downside. We broke structure to the downside again. So that's a multiple confirmation that this market is bearish. And after breaking that structure to the downside, here became our next supply zone. That was when I saw a lot of other people posting that continue selling from here. And I told you that, hey, don't sell. Follow market structure, because the market will come back to 1970, from 1940 to $1970 area with 300 pips, and continue breaking structure. So this was the next supply zone. So what happened at that next supply zone? Are you getting it? We came and broke structure again. Are you getting it? So overall, what are you seeing? Whatever I'm seeing here right now actually did what? Formed a bigger head and shoulders pattern that is not supposed to break. Are you getting it? So we're supposed to continue this trade to the upside. So this is where the entire bullish structure failed. Are you getting it? With this break. So if you follow up and you know your chart patterns very well, you're supposed to know that this is a head. Are you getting it? And shoulders pattern. I don't know how you read your chart though, but this is how I read my chart. And this footprint has been helping me couple with my, market structure perspective, break of structure, change of character, and every other thing I've been using to look at this market and analyze it completely. You should know that we have a break of structure. And if we continue breaking to the downside, this break of structure has an extension to the downside of 1,910 area. Are you getting take profit to all this other block area? Are you getting? So what is happening right now? Remember, when some few days ago, I told you that if this market must surely continue the structure to the upside, we are supposed to do what? Use this particular place as a fake out. So we came back to this retest with this fundamental, the NFP report that particular day. You should have taken this trade. We took this trade. I think, yes, we took this trade to this particular back-to-issue test. And I was saying that the market must not close below. Remember, don't get carried away. I told you that the market must not close below this head and shoulders pattern. Let it just recover it, test and continue going. I've been saying that was what happened at 1,000. Remember, that was what happened at 1,600 to 1,700. So if this market must continue to go, the market must do recover, making this whole place a fake out. Recover, then before you start buying, is a retest upon that recovery of 1944 that you can take the trade back to 1980. That was the only buy trade we have. But what are you seeing here right now? The market actually completed what the head and shoulders pattern break. This was a massive break. So we did consolidation for, I think, for 2 days, or from Wednesday to Friday. Are you getting it? Before recovering to the, before recovering, retesting, not even recovering. Let me just use retesting the head and shoulder pattern break and retest. And what are you saying? We're breaking structure to the downside. This is a break of structure. So the only thing that the market has right now, the only upside the market has right now is even back to the support. But overall, what are you still saying? Why are you getting scared if you are seeing how the market has been trending? Even internally, you can see that the market has actually did what? Broke structure to the downside. This was why we took 1932 sniper entry yesterday by first of all taking profit from this little. You can see that the market is trending perfectly well. You are the one that is failing to recognize how the market is trending already. Are you getting it? So anyway, you see the market doing a fake out, that is where you now measure your overall trend. So from here right now, if this market recovers, listen or follow up, if this market recover this particular place, are you getting it, and wants to break and retest this particular support that it has broken, I have known that the market is trying to come forward a retracement to the upside. And how do you find out where it's coming to? Where was the last impulse? Where was the last impulse? So look at the flip side now. This is impulse retracement, and this is the only third impulse we have. So if we drive it to an Elliott wave, you see that this one, two, sorry, on the flip side, 1, 2, 3 always breaks a major structure. Are you getting it? Then 4 tries to recover. Are you getting it? Then 5. But even 4 might not go up to that extent. Why? Because we still have major areas. So if he likes, the moment I'm saying that is breaking and recovering a particular smaller, structure, if I zoom that perfectly well, recover a particular smaller structure, I know that, okay, it has done a retracement, as in recover a particular smaller structure, and we want to do a measurement of 0.5 retracement to the upside. And where are you seeing your 0.5? Look at it. The previous area of value. So even though we want to recover this particular 1 hour, let me go to the 1 hour flip side. Even though we want to recover this smaller time frame, is it getting it? Support, even though we are trying to recover it back to the upside and recover, you should know that you should be using 30 pips from 1932 sniper entry from yesterday. We had it from yesterday. It's clear. It's clear. The market is even clear on the lower time frame. If you're not carried away, look, let me show you something. Let me go back, delete all this, and show you something. The market is being clear. Are you getting it? If you come to the 15 minutes time frame, I told you that your price action is happening in your 15 minutes time frame. And what was it? The first trade we had was this trade taking 1932. And when we saw this consolidation, the market pausing on this area, we took profit from 1924. Are you getting it? And we don't trade in New York sessions if we have taken profit. So I was expecting a retest back to this area. And the moment we are not breaking back into it using a smaller price action. So your lower time frames is even giving you whatever is happening, because even on the lower time frame, you can see price action patterns happening. And what's the price action? There was a bearish pressure. There was a bearish pressure. Are you getting it? So is this a recovery of the bearish pressure trend line? Are you getting it? That's what we're about to find out right now, because we broke to the downside, then we tested. Now, are we recovering this bearish pressure trend line to break back and retest and do a 0.5 retracement before breaking down to 1900 again? You should have all those things in your head. And whatever I'm saying here right now is that if you're on a particular trade already, you should first of all do what? Go out, because you are never supposed to be taking trades from all the smaller, what's it called, break of structure. Your major entry was at 1944 retest of the head and shoulders pattern. Are you getting? So if you are taking any trade from these particular areas, you should know that your stop loss, calculate your risk and money management and put your stop loss above those areas, or you can take a shorter trade and take your stop loss above maybe 1932 to 1935, 30 pips. Are you getting me? But if you're swinging it, you should know that you should calculate your risk. If you're supposed to use a 1 lot before for 30 pips, know that you have a longer, probably 200 pips to the upside. Are you getting it? So the market is there. Gold is perfect. Trust me. Gold is perfect, but overall, gold is bearish. Gold is bearish. If you are not using trend line, I'm not a fan of trend lines. I'm not a fan of trend lines to say I usually just use my market structure to drive this market, knowing that this was a previous resistance. I broke it to the downside, like we did here. I get retested. Now we broke structure again. I will retesting this particular structure and continue going to 1,910 before even doing any major recovery. That is what you should be looking at. That is what you should be looking at, not what is happening here right now. So even on the 4-hourly chart, the 4-hourly chart has been clean to me. Are you getting it? I know that I have a sell position from 1,948 and 940 already because of this price action that was happening yesterday. So when this price action was happening, all I was looking for, all my brain was doing was looking for what? Entry zones. Are you getting it? So these were entry zones. These were entry zones because the market is failing to recover. Are you getting it? The market was failing to recover, form inside a descent triangle, which is a bearish continuation pattern. So these were your entry zone, second entry, third entry, fourth entry before breaking this particular structure to the downside. This is your particular descent triangle to the downside. Now retesting it, you can see that this is on that entry at 1932 sniper entry again. And what? We are on our way down. So the moment you are unable to break below any structure again, you should know that this market might come back, recover, but you know that this is 1944 area is a major resistance zone because it's a major head and shoulders pattern area where you should be selling from. Are you getting it? So you can be selling from to the next resistance. These are still like 100 to 120 pips to the, a $1,000, a one lot is about $1,000 to 1,200. So yeah, how are you looking at your market? So when I'm doing the editing of this video, I will target gold explained because gold is most clearest. I don't need to trade. And people are saying that they are scared of gold because of its movement. Gold is clearer than even USD, clearer than NASDAQ, clearer than, what's it called? To me, gold has been very, very, very sweet and clear to me because I'm seeing the structure building perfectly well and it moves within hours, days. It can give me about 200 pips in a day. Imagine you'll be taking all this, this sell from, let's say you took this sell from 1940 to 1930. Are you getting it? That's 100 pips. Because it was even clearer. It is even clearer. Let me show you something. Even on the lower time frame, go to the 5 minutes time frame. The structure is there. You would have seen a lot of things happening because this was what? Look at. On the flip side, this was what? A double top. And what do I mean by a double top? When you break a structure to the downside. Are you getting? So there becomes an area of value. Break a double top, break a structure to the downside. So that place even became an area of value. So how can you tell me that gold is not clear? That the market might actually find. So whenever I get to these areas, what am I looking for? I'm looking for a bearish price action a bearish price action that happened in those areas. If you zoom very well, you see your price action pattern. Bearish something must show you there on your lower time frame. And what can you see? A shooting star, look at it, followed by a bearish candle that was unable to recover. So even on your 1 minute, 3 minutes time frame, you are seeing your markets are trading perfectly well for you. Once you find your entries with your price action patterns, again, look at it. It switched. It switched. Look at it, break to the upside, break to the downside, was unable to recover, continue breaking. You take your entry from here on 1940. You should have known that definitely you come back to your hourly chart and check whatever is happening. So the market, we are there trending perfectly well. Gold has been trending perfectly well. You would have taken back to this support area of 1930, 1932 from that sniper entry on the lower time frame. Are you getting? So right now, what is happening? The market is still bearish. So the bearishness has been from the higher time frame, breaking structure, it's just there. It's just you guys probably don't know how to, read your structures perfectly well. You're trying to buy back, you are, forcing yourself to enter a buy trade, and you are not following up. So I just had to do this video to, quench the taste of those questions being asked by not knowing some pivotal points, knowing that this is a pivot point right now. Are you getting it? And it was even very clear. It came back. We found two support here. Now we're broken that support, are testing. So this market has a tendency of continuing like that. The only way it will definitely turn this place to a fake out is if we recover from here. I know that, okay, the market has recovered a particular level. So I will go and look at then structure. What I'll be looking at then is now a structure. Okay, this market could recover that particular support. That means I have to go back to, sorry, I have to go back to this impulsive move again and check wherever the market might be coming to. And if you check that impulsive move where it might be coming to, from there to here, is still 0.5. Look at it. This major resistance zone of the head and shoulders pattern break and retest. So on the flip side, we might just come back here. And if we are failing to break below this support again, it might just do something else again, a bullish price action pattern, which is a bullish continuation pattern to the upside, because we are still what on 0.5, 0.618 retracement level. If you look at the market overall from the overall higher time frame perspective, you would have known that, okay, this is a retracement. If this was truly what, remember I said, if this was truly a bullish continuation and this is a, impulse retracement to continue to the upside, we're supposed to at least break, then retest and continue going on the flip side according to market structure. But for us, failing to break above 1980 to 2000, at least, even changing character to the upside in this area, are you guessing it? On the flip side, we might be turning this place into an inducement, which is turning into right now. So I'm using this particular bearish ABC move, are you getting it, before continuing to the upside to trade my market. That's why I am, my heart is solid by whatever is happening here right now. I guess my heart is solid by whatever is happening here right now. So is it not clear? Is this market not clear enough for you to know that, okay, a doji was able to form on this particular area? So your time frames are there to show you your bearish price action perspective. So if this market is supposed to recover, why did it print a doji, which is a, what's it called, on a 2-hourly chart? And why did it print another, what's it called, bearish candle on the 2-hourly chart? So you use your lower time frame, your time frames to check and look for, confluences that is giving you the, what English should I use there? That is giving you the sentiment of whatever is happening in the market, because this was a previous support, but the major one is this one. So this one can fail and come back to 0.5. Are you getting it? And continue selling down again, no problem. But what if it does this and, did a head and shoulders pattern and break above and retest? So these are places you should be buying from. These are places you should be buying from. These are places you should be selling from. So the markets are there to show you. So you should know where to enter from, not, FOMOing and, being afraid that, okay, whatever the market, if it's going to take you to put your stop loss at 1935 and take a 1932 into 30 pips, you lose this, no problem, because you did not enter from here, no problem. Wait, it might recover. You might even just take an entry, 100 pips. You still make 70 pips. Even if you remove your 30 pips, you still make 70 pips. So the market is always there to give you your profits, not you as in, not even to throw you out of the market or even blow your account. If you're blowing an account, that means you don't know what you're doing. Okay? So I just said I should explain how, especially gold, how it moves 100% perfectly well for you, so that you know what you're doing. I get it. So I don't want to go to another asset. USD is still doing the same thing. Perfectly moving well, moving perfectly well, moving perfectly well. Knowing that this is an area of value, are you getting it? Look at it. Now it's printing a support and resistance zone. Or I don't even need to use a support and resistance zone. I'm just looking for a price action. What's it called? A price action chart pattern. We broke down, we tested, we broke down, we tested. We are unable to break down. So if we retest doing a W pattern, a head and shoulders pattern, are we going to recover? The moment we are not breaking, retesting, Are you getting? Know that we're breaking to the next support. So I want to buy from here, not from the middle here. So I want to buy from here. Sorry, I said I want to buy from. I want to sell from there because the moment we are coming and I'm finding a bearish, a candlestick pattern, a bearish entry. I'll take that trade, put my stop loss above there because it's a game of probability. Put my stop loss above there and take this trade, about 200 pips to the downside again. The only way this trade can be validated is breaking above, doing a head and shoulders pattern, break above, then enter a trade. I guess in it, enter a trade to the next pivotal point, which is this one. So this is under 1,140, 1,100 area, 1.100 to 1.150. That's 150 pips. Put a stop loss, take a risk to reward. Are you getting it? So your trade should be risk to reward. So probably use how many pips. Are you getting it? Use a probably 14 pips or is it 20 pips or something like that. Take a 4 risk to reward or 5 risk to reward. That's how the you don't have to take every move. You're looking for those sure bets, sure moves to take. Are you getting? So I was just there to show you how this market actually moves because I know that if gold is going down, definitely there's no point of USD breaking above and retesting because we're just supposed to come back to this major resistance zone and sell to the next resistance support. So is that too much? Is that too hard to understand? Is that too hard to leave your trade to run, to maximize your profit? So I'll end this here for now. If you have any other questions, this particular video should open your brain. Trading is psychology. Trading is common sense. Trading is knowing that, okay, on the daily time frame, do you think traders as buyers we want to buy from this $1940 area back to the upside? Because if they really want to buy, it's just supposed to be a head and shoulders pattern. They are not even supposed to break down so that they can bring more buyers in. Are you getting it? Then break above, we test this $1980 area and take this trade to the next level. So your chart patterns, your market structures, your price action patterns are there. What the price is doing, what the the news coming out from dollar, news coming out from these euros and all this forex market, your stocks, your indices, they are there just to guide you as fundamentals to tell you what the market wants to do next. To tell you what the market wants to do next. So even go to the weekly, you will see that the market is extremely bearish. Look at the weekly. Look at your candles. Let me take them off. Look at your candles. What are you saying? Does this market look like what can just come down and come to this particular, okay, let's even do something. Let me delete. Let me delete everything. Let's say, okay, this is what's it called? This is a demand. How is it a demand? How is that a demand? We did not break above anything. I know a brick is a brick. This was the last high we had. A week is a brick, but is your weekly chart giving you, and the only way I can even take a bullish, a bullish trade is waiting for next week. Are you getting it? Waiting for next week, and the next week must print what? A bullish engulfing candle. We have 2 days to go, I know, but next week must print a bullish engulfing candle, then entry from the beginning of the previous candle, then take this trade to the next resistance zone. So even if I want to trade this, I need to wait the whole of next week to see what next week is going to do. I want to check the weekly. But look at this chart. What are you saying? Does this market look like what wants to retrace from those areas? No, the market itself wants to come to these particular areas to find and induce everybody that was here. I'll show you an example of that particular what's it called? This particular doji you are seeing on the weekly and why it failed. Are you getting it? I was doing a video and I was telling people why this particular place is going to fail. I think it's on the 1 hour chart. Let me look for it. Why it's going to fail, because that was just, okay, look at it. This is it. Let me show you. This was retracement to the upside. I think this video is getting too long, but it's important that I explain very well. So we had a break of structure. Are you getting it? We had a demand zone. But if you don't follow your market very well, you'll make mistakes. Look at. It's not perfect. Look at what happened here. So we had a ABC move back into this 1970 from 19. Everybody was selling from here. I was saying they don't sell. This is going to be a retracement. There's going to be a retracement back to supply. Are you getting it? I'm 100% sure there's going to be a retracement back to supply, not even 0.5, because these whole areas are gaps. So there's nothing that will stop it from getting to $1970 area because there was no sluggish movement to the downside. So we needed to fill this gap of this fundamental news. This is a gap. So we needed to fill this gap. This was just plain. And whenever you see plain markets like this, it tends to recover it. Are you getting it? Before continuing to the downside. So, and the what would you use to know is the equal reaction it brings. As it brought this next big equal reaction, this next big candles, we know that market is bullish. But what did it do? It sluggishly came back within days, back to supply. So bears will look for a price action perspective. And this was in what? An evening star, and took the trade to break structure to again. So the market is always telling you what he wants to do. Probably with maybe 40 to 100 pips. Then you enter, put a 100 pip stop loss to it, and continue going that direction. Now, when it broke down, are you getting it? And I think I was telling everybody that I'm not seeing any price action that this market will break down. It actually break down because if this was truly a demand zone, we'll find out from next week or maybe next 2 weeks. If truly that was a weekly demand zone, when the price comes in here, you see those bullish rejections. All these rejections, you see them. You will surely see them. It will surely give you a bullish price action perspective. All you just need to do is go to the 15 minutes time frame to wait for what? A change of character, enter and continue going. So without a change of character, you're not supposed to enter into any market. If you even entered and it took your stop loss, this was on that entry for you to do what? Come to the downside again. Because this was a pivot, this was now an area of value that, okay, if truly we broke down, they were supposed to do a retracement and continue going to the downside. This is good for you. Trust me, gold does not lie. Gold is very, very pure. That's why you see that whenever I'm talking, I'm always, precise. And I tell you that, oh, this market must not close below this particular area. This market must not close below this particular area. That's because I previously saw my, previously saw my head and shoulders pattern that has broken down on the 4-hourly chart and retesting. And for retesting, I'm seeing a bearish price action on that retest. This is my entry from 1944. My stop loss at 1956, which is on 120 pip stop loss to take this market down here to the next available, support zones. And I'm telling you that 1,900 might not hold because of what? The sentiment. Let me use that to close this particular video. Because of what? The sentiment that I have on the daily time frame that, okay, if this is how the structure looks like, are you getting it? And we are unable to break above, and we even invalidating the head and shoulders pattern. That means the market wants to do what? An ABC move to the downside after touching. I guess this is an ABC move to the downside after touching resistance to the downside, to back to into back into the demand zones or the demand zones or the support area. Again, so this is a demand zone. This will be an inducement. So if we bring our Fibonacci trend extension in, where is the market extending to? Remember what we'll do. This 0.5. On the flip side, on the bearish side, look at the market was even retracing from 0.5. A lot of people have been bullish, looking at the bullish flip side. I guess it retraced for 0.5 on the bearish side because we broke structure the downside, upside. We changed character to the downside. This was 0.5 retracement. 0.5 retracement. Look at perfectly well retracing from 0.5. You guys did not see it because you were trading with the emotions and expecting that the market should continue to the upside. So that's what you'll be looking at. So if I should bring that retracement tools back and go to the 4-hourly chart, the market after changing to the downside, switching to the downside, it came back to 0.5 sniper from 1980, came back, touched it the first time, touched it again, broke to the downside, changed character to the downside. That was where I knew that we are going down. So is this going to prevail? The daily chart is about showing you that this is not going to prevail because we retrace at 0 point. We change character back to the downside. I get to break a structure, change character back to the downside. So 0.5. Now we're going down. And where is the market going to from here? So that I can end this video. Where is the market going to? Use of Fibonacci trend extension levels. Where do you take profit from? We take profit from 0.5, 0.618, 0.0, sorry, we take profit from 0.618 and 0.786. The market wants to come to 1880. Probably the last result, 1850, and probably the support of 1813. So if you've taken 1980 to 1880, that's 1,000 pips. Then if you are taking a trade from 1940 back to 1880, you know how many pips is that if you calculate? You understand? So this is just how I check my market and said, okay, if this was an impulsive move, ABC move to the upside, are you getting it? Then the market wants, sorry, an ABCD harmonic move to the upside. Then the market probably wants to do an ABC move to the downside before you can find more demand to come and use and break. Take all this liquidity, take every inducement, induce everybody, and find major demand, gather enough money that you can use coming back to 2050. So this is what we have in the market right now. What I have in the market right now for you, my game plan of trading this market to 1850. I guess my game plan of swinging this market to 1850. I get it, but we are still in this bullish move overall. Does not mean that if this market does an ABC move to the downside, does not mean that structures are invalidated. No, does not mean that we are supposed to break below here. No, this market still just need to find that ABC move, and come back to 1980, then come back to maybe 1940, then find that head and shoulders pattern, break above it. I get it. We test and continue doing what, breaking to the upside. So because we're supposed to do an ABC move, and do 1, 2, 3, always break a major structure. 4, it tells that structure, and 5. So this is how I trade my market. I should bring it to your notice. I believe you, if you watch the video over and over again, you understand how market structure works, how price action pattern works, what I look at before taking my trades. I look at my price action patterns. I look at others in my chart patterns. I look at what the market is printing, coupled with my fundamental news, coupled with every other thing that is happening to take my decision. So at the end of the day, it's not about the chart, it's about my own psychology and where and what I need to do. While I'm taking lower lots at 1932, if I have not taken bigger lots from 1940, those are things you have to put in your head to trade this entire market. So this is what I have for you for today. Take care and bye for now. Bye-bye. You know where to contact me. You know where to contact me, my Telegram, my YouTube, what's it called, my Telegram, my Instagram, any other place, VisionX at John Nelson 005. VisionX on my Telegram channel, VisionX Limited on my Telegram channel. These trades are there perfectly well, knowing how structure works, knowing that this might turn to an inducement if the head and shoulder pattern does not form, knowing that 1900 will not hold and turn to an inducement if the head and shoulder pattern does not form. You understand? So this is your market for you. As simple as that. Understand? As simple as that. Take care and bye. Bye.